guys. So we'll be starting with the first topic of our financial management, that is scope and objectives of financial management. This is your first topic. It is a theory topic, so you could expect around 2 to 4 marks to turn off from this particular topic. So only 2 marks, sir. I will skip it off, sir. Please don't approach the examination, CA examination, especially with that attitude. Even half a mark is very, very, very important. I've seen many people flunk just because for 1 mark. 1 mark, literally 39, 199. That too much painful. 40 full crossed, aggregate no. Instead of 200, it became 199. So CA for them is not chartered accountancy. CA became come again for the examination. So please don't do that. Okay. So practical, my favorite, sir. Theory boring, sir. Equal importance to every damn thing in the syllabus. Doesn't matter theory or practical. The way we give importance to the practical subjects, same thing we'll give it for theory. So we have to make sure, first target for today is we have to make sure that every aspect of theory of today's session we will remember in today. We'll see. That is the first target, both for you as well as for me. Can we see whether we can fulfill that target? At the end of the topic, can you give me that confirmation? Okay. First topic, the name is what, sir? Objectives of financial management. All right. Sir, finance management means managing money. Correct, no? Pana, rokka, duddu, correct, no? All this. All right. Before we dive into the topic, I'll give you a scenario. You help me with that scenario. Currently, our academy is located in Bengaluru. Yes. Let's say we want to open a branch in Chennai, because a lot of our CA intermediate audience are coming from Chennai, Tamil Nadu region. Okay, so we thought, okay, why don't we open a branch in Chennai? Can you tell me what are the things I need to keep in mind? Don't look into all that stuff. Just tell me what are the things. Now, you are a finance manager. Board of ArivuPro approached you and told, open an academy, macha, in Chennai. So what are the things you'll focus on? Give me some pointers? Online also can type. You have also paid full fees. So you have full rights to type, full rights to ask questions. Okay, yes.
Branch location.
Huh?
Branch location.
Okay, he's saying location. Fine. Awesome. Next. Land. I don't have money. I'm planning to take it on rent. Okay. Next. Huh? What? Learn Tamil, let's see. Okay. Tamil theriyaduma. Enna pannalam? Okay. Next. Okay. That is one. Okay. That is the language thing. Okay. Somebody is saying, sir, finance, sir. And faculties, sir. Okay. Online accepted. Capital, somebody said. Super. Tech setup, it seems. App, resources. Oh my God. So much thing they're typing. Correct. All these are some of the headache areas or the focus that a finance manager should kind of think about. So this, they said, or our material. Actually, all what you're saying is right only. But everything cannot be put into our study material. And they cannot ask marks. For the sake of marks, they will give you few pointers. So what they say, or our material says, is whenever a new business is started, there are 4 main important decisions that you'll have to face through. Every new business will go through what, sir? 4 important phases of decision making. 1, sir, for me, think about it. If I have to start a class means, as somebody pointed out, land. But for me, land is not much concern. What is much concern? What are all those? I need the equipments, furniture, correct? Chairs, tables, television, iPad, camera, mic, projectors, etc., etc. So first I need to, or first phase is, how many fixed assets do I require? Or what and all fixed assets I require? Is it same for every business or varies from business to business? Varies from business to business. Okay. We are not a fixed asset heavy investment industry. We are more to, since we are into service industry, our investment in fixed asset is on the lower side. But still we need to buy, correct? No. Without laptop and all, can I conduct the class in this zamana? No. So first phase is what, sir? How many fixed assets do we require? Good. Second headache area is, to buy fixed asset, no. Currently we need something in the economy. What is that? Money. So second aspect is, okay, you know how many fixed assets you require. Second is, how much will it cost? Will it cost 10 lakh rupees, or will it cost 1 crore rupees, or will it cost 1000 crore rupees, or maybe just 1 lakh rupees. Doesn't matter. How much will it cost to buy all these assets? Got the two areas. What is the first area? Everything what I told, we learn it in the class itself. So keep remembering, yes, as I told you, FM is little bit of a, or majoritarily it's a memory game. Okay, and you are paying full fees means it is my responsibility to make sure that you learn everything in the class. We said that only what are we taking to home? Revision. Okay, so participate with me so that we learn it here itself. First one is, how many fixed assets do we need? Second, how much will it cost? Done now. Two areas, good. How many areas I told we need? 4. 4 made 2 gone. Third one is, just with fixed assets, can I run the academy? Can I run the coaching center, or I need other things also? Other things also. What is that? For my coaching center, first main thing I need is the teachers. For teachers, currently, though, none of our teachers are offering at free of cost. All of us are saying, all of them are telling, give me money, because even they have their family to run, their things, lifestyle to maintain, etc., etc. So other than fixed assets, you will also have other day-to-day expense. So third aspect is how much money you require to run your day-to-day operation. Day-to-day operation means how much salary you need to pay your employees, how much rent you need to pay for the building, how much electricity, water, etc., etc. So to run your day-to-day operation, how much money do you require? That's the third aspect. Are we okay? That only we call it as, in FM terminology, working capital management or working capital. Working capital is the money required to manage your day-to-day business. This is okay. Third area is good. Okay, everything good. But have I got the money yet? Or I just know the money requirements? I just know how much is required. Next is what? How will I fulfill those requirements? Meaning, how will I arrange the money? So fourth decision making is, from how and all, or from what and all source can I raise the finance? The finance can be raised through what and all means? Can you tell me? You can take in company, I can issue equity shares. Company can issue equity shares, or if they want, they can issue preference shares, or they can issue debentures, or they can take a conventional bank loan. So that is your 4 areas. Got it, everybody? So this generally could be asked for 2 mark. Easy? Everyone good? So repeat after me. What are those 4 areas? Tell me. First is, how many fixed assets do you require? Second, how much money or how much it will cost to buy those fixed assets? Third area, how much money you require to run your day-to-day operation? Fourth one, from which source you will arrange the finance? Meaning, how will you raise the money? That's it. Are we good with this? 2 marks if it comes. Can you manage? First area, dum-dummer. Easy. This particular material now is being given in your study material in 15 pages almost. I've summarized it in 3 pages. That's 3 pages. Can't you revise in 1 minute or 2 minutes on the examination day? So that with that confidence, I'm saying you will be able to revise the entire syllabus within 2 hours on the examination day. Okay, now? Can I move on to the next setup, guys? Online also, as I told, keep saying yes, no, no, whatever. They're saying whatever. Okay. Next is, you're sophisticated, guys. No? Financial management means there should be some definition. Otherwise, where is the fun? Somebody should have defined and all this. Okay. Financial management, simply if you want to tell it in definition per se, financial management is a managerial activity which primarily deals with 2 things. Financial management is a managerial activity which deals with 2 things. What are those 2 things? Effective procurement of funds and effective utilization of funds. Ashte. It deals with what, sir? It's an activity which deals with procurement of funds and it deals with utilization of funds. That activity we refer it to as financial management. So why do we do this? To achieve the goal of the business. What is the goal of the business? You tell me what could be our goal? Why did we start the academy? Can you tell? Or if you want to start, let's say, a business. Chartered accountant means after clearing the examination, either you can go to a company and work or start your own practice. Let's say you started your own practice or you want to start your practice. Why? Want to earn money? You will say, I want to earn 1 crore every month. Big shot you are. Okay, you want to earn 1 crore every month. That could be your objective. Is it wrong or it is okay? It is. So objective could be anything. Objective could be to give service, to earn this much profit, or to capture that much amount of market size. Could be anything. So we are doing this activity activity to achieve the objectives of the business. That we look into it a little later. Okay, everyone? So what is FM now? It's a managerial activity which deals with two things. What are those two things? Effective procurement of funds and effective utilization of funds. Ashte. Is it okay? All right. So we said two areas, procurement and utilization. Let's spend a minute to understand that particular aspect. Procurement and utilization. Can we go to the first area first too? First area is what? Procurement of funds. Procurement of funds means what, sir? What does procurement of funds mean? Raising the money, correct? No? Yes, raising the money. How and all can you raise the money, sir? Either by issuing equity shares or preference shares or debentures or bank loan or somebody said venture capital finance, any damn thing. Doesn't matter. Is it okay? You can raise the money through multiple sources. So which and all sources? Chapter number 2 is there. We will spend that in detail. Are we okay with this? So procurement of funds means raising the money. Yes. So we raise the money by keeping three parameters in mind. We raise the money by keeping three parameters in mind. We will call for our class purpose RCC. R, you know, ACC cement, no? Like that, RCC. Okay. R for risk. C for cost. Another C for control. Keeping what parameters we raise the money, we said? Risk, cost, control. That's all. Keeping these three parameters in mind, we will raise the money. Can we spend a minute to understand this, everybody? Okay. Let's say, sir, is equity shares an option to raise the money? Is equity shares an option to raise the money? Let's say I need 10 lakh rupees to start a branch in Chennai. Can I raise that 10 lakh by giving equity shares? Is it possible? Possible, huh? No, yes, what? Yes. All right. First, we will analyze. What is the first factor I told we'll keep in mind to raise the finance? Risk. Can you tell me from a risk perspective, equity shares is less risky or more risky? Maybe I'll compare equity shares with the debentures. First, we'll take equity shares. Keep saying yes, so, or higher, lower, what? You can type L for low, H for high. Equity shares, from the company perspective, I'm talking about, not equity shareholder perspective. From the company perspective, is issuing equity share carries high risk or low risk? Low risk. Low risk. Why? No charge. Okay. Somebody is bringing in law into picture. Huh? Law got over. Huh? No. Okay. Yes. Equity shares has a low risk. How is? Sir, I have raised equity shares to the extent of how much I told, sir? 10 lakh rupees. I raised it from whom? Equity shareholders. I means the company. As a company, do I have an obligation on my head to pay this 10 lakh back to them? After 1 year, 10 lakhs kottbidabeku. Like that, do we have any obligation to pay back or no obligation? No obligation to pay back. Correct? Okay, that is one. There is no obligation to pay back the capital. Should I have to pay them dividend every month or every year? 10% dividend every month or every year. Like that, do I have any obligation? So such a nice source, na sir. I don't have obligation to pay the money back also. I as a company don't have obligation to pay dividend also. Yes. So that means from the company perspective, risk associated with equity shares is very comfortable. That is what I said. How you raise the money depends on three factors: risk, cost, control. So this is what we will analyze for each source of finance and decide which source of finance should we select. Did we understand, everybody? Any confusion is there? No confusion? Can I move on to the next one? So tell me the next factor. You said you will remember after risk it is what, sir? Cost. Risk, cost, control. Okay. Now cost. Excuse me. The cost associated with equity shares is high or low? High or low? High. Low. One answer, Kodi. Whoever tells the loudest, I will tell that. They will bring in that answer. High or low? What is it? Higher. From the cost perspective, equity shares carry high cost. So how, sir? We don't pay dividend only. So cost is obviously very low, no. But why have you written very high? sir, you have money with you, 10 lakh rupees. Okay. State Bank of Manager, no, is your uncle. He called up, come to my branch now. Invest money in my branch. I will give you 5% return. Fixed deposit for 1 year, no? If you invest, the branch manager is telling you he'll give you 5% return. You told, no, I will invest in ArivuPro. I believe in one faculty, CS Sandesh. Okay. So you told you'll be able to make more money and you want to invest where, sir? ArivuPro. We are not even a public limited company. We are a private limited company. Okay. Now you came and asked, okay, I will invest in your company. You asked me directly only, FM teacher, no? You straight away came to me and said, I will give you money. How much you will give? For a moment, I felt bad. What is coming directly and asking? I said, okay, fine. What the heck? I will also give you 5% return. Right? What do you think he will say? Not see. Seriously, he will say, Hogolo. Okay, get lost, people. But do you think he'll be ready to accept 5% on equity shares? See, I'm issuing equity shares. Will an equity shareholder accept only 5%, sir? He will expect more. Why? Because State Bank of SBI ka fixed deposit, how much return it is giving? 5%. If you invest money in State Bank of India, is there any high risk or low risk? Is safe? Can I say like this? SBI is a government controlled bank and you feel pretty safe to invest money there, correct? Can we assure the same amount of safety as SBI ka fixed deposit, ArivuPro? No. Because it's a company, anything could happen. If all the teachers quit means ArivuPro also will go probably down. Quite a possibility. That means you as a shareholder are taking higher risk. That means you will expect higher return. So cost here does not mean the actual amount given. Cost here refers to the expectation of whom? Shareholder. So if shareholder is investing money in the form of equity share, his expectation will be on the higher side. So what he will say, give me good dividend. At least 10% dividend you should give me. Or make sure that the company ka market price is going on up and up. Even if you don't give dividend, some companies and all don't give dividend at all, especially Apple and all. No? Apple, the eatable apple, not that. You have no US based company, Apples and all, no? They hardly pay dividend. In fact, majority of the growth companies, no, they don't pay good dividend. But if you look at their market price, every 3 years, no, their share price literally gets doubled. From 100 in 3 years, it will become 200. Now, are you comfortable investing there? That means more or less you're getting a return to the extent of compounded annual return. If you calculate, you're getting almost 23-24% every year. Are you comfortable? Yes. So that is on that account we say cost associated with the equity shares is high. Okay na or still doubt? This or okay. So got it, no? Can I move on to the next one? So 2 factors, risk, cost and control. Sir, who are the owners of the company? Equity share holders. So if I issue any additional equity shares, let's say ArivuPro Academy was held by 2 people only. The earlier shareholders of ArivuPro is only 2, S&S. I'm not the shareholder, I'm just saying. Is it okay? Let's say this person, or maybe I'll write it as A and B. They'll say both you only own, sir, they will say. Okay. A owns 50%, B owns 50%. Is it okay? So 100% of the shares of the company are held by how many individuals, sir? 2 individuals. Now we want to open a branch in Chennai. How much money we need for that? 10 lakh. How are we planning to raise it? Equity shares. Let's say we gave another 10%. This 10 lakh no comes up to how much I'm saying? 10%. Additional 10% equity shares we issue. Because if you give equity shares, no, somebody else will get the ownership rights, correct now? Now this 10%, is it held by A and B or others? Others. Now A and B are owning 100% or less. Now A and B are holding only 90% because when the company issues new equity shares, others are holding the balance 10%. Correct or no? Yes. Company means can the decision be taken left, right, center, or you have to take equity shareholders ka approval? Any major decisions if you want to take, you have to take shareholders ka approval. Yes or no? That means now, earlier, no, if I was able to, if A and B were convinced, they could do anything. Correct? Now, only if A and B are convinced can they do, or even this others also should be convinced. Others also should be convinced. Now you tell me this control, no? A and B still have the same amount of control, or their control has reduced? Their control has got diluted. Can I say like this? Diluted means it has got reduced. So whenever a company issues equity shares, what happens to control, sir? Control gets diluted, or the existing powers of the equity shareholders will reduce. Is this okay? This is one. You could look at it as an advantage, or also you can look at it as a disadvantage. So keeping these in mind, you will go for it. Need a minute or okay? Need a minute? Able to understand this much and all? You don't have to tell an examination. You just have to call out the factors. What are those factors? RCC, risk, cost, control. I'm explaining you what are those by keeping each component in mind. Can we do maybe one more exercise for debentures also, so that we can understand this a little better? One, okay. Let's say we are raising this 10 lakh money to open a new branch, not by giving equity shares, but by issuing debentures, or maybe by taking bank loan. Doesn't matter. Both are debt, Both are a debt loan. Okay. Now you tell me, sir, risk associated with a bank loan or debentures compared to equity shares, risk is low or high? Compared to equity shares, the risk is low or high? Okay, so this is high. Why high? One, we have two obligations. Company has two obligations. What are those? One, if you have taken a loan, means can you keep it forever, or you need to repay? You need to repay. So one, you have one obligation headache to repay the loan amount. Correct? Second headache is what? On this loan, you also need to pay interest. Can you say this time no profit macha, so no interest? Can you tell bank people like this? They will say that is your headache macha. Give me my interest. Yes or no? So since you have two obligations on your headache, we say risk associated with a debt or a debenture is high. Done. Can I move on to the next one? Next component is what? Cost. Cost associated with debenture is high or low? Compared to equity shareholders, debenture holders are taking more risk or less risk? Compared to equity shareholders, debenture holders are taking more risk or less risk? Less risk. Yes, less risk. Yes, because you will get your money back. Equity shareholders may not get their money back forever. So risk associated with equity shareholders is high. Is it okay? Equity shareholders are taking more risk. Debenture holders are taking less risk. Risk and return will go hand in hand. More risk you take, more return you will get. Less risk you take, less return. So cost associated with debenture compared to equity shareholders is low. Because doesn't matter whether you make 1 crore profit or 1000 crore profit. Let's say these are 10% debentures or 10% loan. How much interest you will give to the bank people or debenture holders? Will you give 100% or only 10%? Even if you make super duper profit, still you will pay how much interest? 10%. Will you pay even a single penny more than 10%? No. Hence the cost is what? Yes, sir. Last aspect is control. Control means, do debenture holders and all have voting power? Are they owners? So now A and B know, should they have to consult debenture holders for all their decision making, or every control is still with them only? Full control is still with A and B. So is there any dilution of control if the company goes for debentures or bank loan, or no dilution? No dilution. That's all. It's a fun. So is this aspect done or done? Can I go for the next one? So I told, let's have a quick recap. Let's see how much you remember. Okay, I said new business will go through 4 stages. What are those 4 stages? How many fixed assets you need? Second, how much it will cost to buy those fixed assets. Third one, how much money you need for day-to-day operations. Fourth one, source of finance, meaning how will you raise the money. That's the first aspect. And financial management, it's a managerial activity which deals with 2 things: effective procurement of funds, effective utilization of funds. Yes. And how do you, or keeping what parameters in mind will you decide on the procurement of funds? 3 components: RCC, as in risk, cost, control. Keeping these in mind, you will decide which source of finance a company should opt for. Then can I go for the next leg of things, which is what? Utilization of funds. Okay, I need how much money to start the academy? I told 10. Yes. So let's say company issued equity shares. We issued equity shares to raise how much money? 10 lakh. Now, how much money as a company we have? 10 lakhs. Am I going to keep it idle or what am I going to do now? I'll use this 10 lakh or what will I do with this 10 lakh? I will use it. Use it for what purpose? To buy some fixed assets. You know, to start an academy, we need a laptop, a projector, blah, 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 blah and all. So I will use this 10 lakh to buy whatever fixed assets I need. Is it okay? That's all. Or I need some money for day-to-day operation also. I need some money for day-to-day operation also. So that means after procurement, I will use the funds for one of the two purposes. One is what? To buy off the fixed assets or for my day-to-day operation, which we call it as working capital management. That's all. I will use it for one of the two purposes. Generally, equity shares and all, we'll use it for fixed assets. Long-term finance, we use it for long-term purposes. Short-term finance, we will use it for working capital purpose. That we will discuss in later when we go to working capital management and all. For the time being, after procuring, we will use the funds either for two purposes. One, to buy fixed asset or for working capital management. Yes, sir. Okay. How much money I have now? 10. So we know that we will use it only for either fixed assets or for working capital. Question is, of this 10 lakh, how much I will use it for fixed asset? Of this 10 lakh, how much I will use it for fixed asset? How much for working capital? Is there any magic formula? 90% for fixed asset, 10% for working capital, or 80-20, 70-30, 48-52. Like this, is there any magic formula or it depends? It depends on whom? The company, on the business, etc. etc. Are we okay? So there is no magic formula that this much will be utilized for fixed asset, balance will be utilized. There is nothing like that. It is based on the requirements or based on the business. Is it okay? All right. So how will you decide fixed asset? For an academy, it's very simple. Let us say I want to start with CA Foundation, CA Inter, CA Final coaching. A branch in Chennai, no? I want to start only with CA course across all the three levels, Foundation, Inter and Final. Generally, Foundation and Intermediate happen in the evening times. Final happens during the morning because many people have to go for articleship and articleship students find it difficult to come in the evening. Is it okay? Now, simple funda. That means what, sir? I need how many fixed assets now? Can you tell me? One or 10. We'll go on decoding one by one. How many classrooms minimum I require? How many classrooms minimum, not maximum? Minimum, how many classrooms I require? I need 2 classroom. Agreed? Because anyway, final I can do it in the morning. Yes. And this morning classroom, I can use it either for foundation or for intermediate. That means minimum I need to have 2 classrooms. Classroom means, can I follow old Gurukul system and tell the students, hey, machas and machis, please sit on the floor. Come, old Gurukul. I'll sit on the chair, you sit on the floor. Does it work in today's zamana? One day maybe people will look at it, oh, nice, different experience. Second day they will throw stones on you. Correct, no, dabbar and maklu. They take fees and they're not even giving us chair. Yes or no? So that means I need to have some chairs. 30 chairs or 40 chairs depending on the expectation. Like this I'll go on estimating. So 2 classroom means it should have at least 2 laptops, 2 projectors, 2 iPads, 2 music systems or your basically your mic and etc etc. Like this we will kind of decode to find how many assets we need. Are we good, sir? Yes, sir. Sir, laptop, no, sir. Which one will you buy, sir? Will you buy MacBook, sir, or will you buy Dell, sir? Possible? Because you have multiple assets. For each asset, you have options these days. Correct? No, computers also, you have 101 things. So if you have mutually exclusive assets, can I buy both, sir? Or I will select one? See, I don't have so much money. That means we have to select only one. How will you select? That selection is done through one technique known as capital budgeting. Is it okay? Fixed asset ka selection is based on one technique known as what, sir? Capital budgeting. We have 2 topics which talks about this. Some of you, if have gone through your BCom route, you might have already done this. NPV, net present value, IRR, profitability index. No, bad. So anyway, we will learn it here. Is it okay? We have 2 topics which deals with that. Chapter number 7 or 8, it will come there. Are we good? For now, you just know that selection of fixed asset is based on one technique known as capital budgeting. That technique will tell you how you or which asset should you buy for. There are certain parameters for it. Too early to discuss this. Good enough? Okay, so yes, so we discussed that. What did we discuss? After procuring, we will utilize the funds for one of the two purposes, either for to buy fixed asset or for working capital. How will you decide which fixed asset you will buy? Based on what technique? Based on a technique known as capital budgeting. I've called out all of it over here. Quickly, I'm just telling you. Are you okay with this? None? All right. Once you have decided how much money you will use it for fixed asset, balance money you will use it for working capital purpose. Okay. So how much working capital we should maintain? We say we should maintain working capital at optimum level. Meaning, let's say I need 1,50,000 every month to run my day-to-day operation. To pay teachers' salary, employees' salary, electricity, blah, 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 blah and all. To pay every expenditure, how much money I require every month? 1,50,000. That means how much minimum bank balance I should maintain every month. Minimum, how much I should maintain in my bank balance? 1,50,000. Why 150? You have expense to the extent of 150. Yes. Can I keep it neck to neck? Can I keep it neck to neck, or I would like to have some buffer? Because it's possible that sometimes your expense could increase. So let's say I want to maintain my bank balance to the extent of 2 lakhs. Safety cushion 50,000. Is this okay? Safety side. How much our safety? Maybe 50,000 extra as safety, or maybe 1 lakh as extra, depending on business. Let's say I want to maintain 5 lakh every month in my bank balance as safety. This looks reasonable or foolish move? Foolish. Yes, no. So because you need how much for your day-to-day operation? 1.5. How much cash you are planning to maintain idle with you? If you just maintain cash idle with you, it's a loss. No? At least if you have surplus money, will you keep it in cash, or will you at least invest? Invest. May not be in stock market or crypto market. At least you can invest in government bonds. RBI, central government, state government, like this, they issue some safe instruments. If you have surplus money, invest. Is it okay? That's what we are trying to say. Maintain working capital at optimum level. So how do we determine working optimum level? We have a separate chapter known as working capital. There we will discuss in detail. First chapter is just an overview. It's not really a chapter. It is just a summary of what we're going to learn next. This is okay? And that's first page of our chart book is done. 33.33% done. Can I go for the next one? Another few aspects to be done, and then this chapter will be over. So far, you're able to understand things are quite easy. Yes. Aramse, this chapter I feel Aramse you can score 2 to 4 marks without much problem, because hardly few things to remember. That's all. Can I go the next aspect, or if there's anything, or if you want some processing time, I shall wait. All right. Next, task of financial management. Tasks of financial management. For our class purpose, we'll call it as STOBs, not STOBs. How to remember? I've just given all this. Okay, what are the tasks of financial management? Why you don't want to copy and all? Why do you want to copy the whole thing? Buy one chart book, that's all. Why do you want to copy and all? It's there in your main notebook also. But main notebook, as I told you, is for 8 to 10 pages. That I've summarized it in 2 to 3 pages here. So if you don't want to buy chart book, that is also fine. That is totally your call. But if you want to just help with your revision, you can go for it. Okay, so all right, coming back to this tasks of financial management, which for our class purpose we are calling it as STOBs. First S for setting the sales target. See, if you are finance manager, obviously first thing you'll be expected to do is set the sales target, meaning how much sales we want to achieve in the current year. Because higher the sales of the company, better position will be in the company position will be better. Agreed or not? Just like that, can we say, you asked me, how much sales will you achieve? I say, we'll see. Can I talk like that being a finance manager, or I should have a target in mind? See, only if you have a target in mind, we can work towards it, correct? No? It's like students. Without plan, you will go or you will make some plan. Whether you will fulfill it or not is a different issue. I'm not asking that. You will make a study plan. Huh? Yeah. All of us do make the study plan, correct? No, this pakka from tomorrow, I will study 3 hours every day. Whether that happens or not is a different issue, but we'll definitely make one. Yes or no? So as a finance manager, you are expected to set your revenue target. Could be whatever, 100 crore, 50 crore, 1 crore, 1 lakh, doesn't matter. That is the first task of financial management or financial manager. Setting the sales target. What is the abbreviation or short form we call it as? STOPS. First S we got it, no? Setting the sales target. T for tax planning. Every company has to pay tax to the government, correct? So you have to plan in such a way that you can reduce your tax burden. I'm not talking about tax evasion. I'm talking about tax planning. Tax subject is done. Tax not done, huh? Okay, no problem. Tax evasion means fraud. Committing fraud or going against the law, we call it as tax evasion. Meaning purposefully I am not paying the tax. Meaning I'm evading it. But here I'm not talking about evasion. I'm talking about tax planning. In Income Tax Act of 1961, which Vikas sir anyway will take you through that, okay, there are some ways or section give you some relaxation. Like, tax is not even done, no? Oh, let's not go into that, okay? Some of you have done, you can recall. There are section 54 exemptions, section 10 exemptions, etc., etc. in Income Tax Act. So we can plan these things so that you can avoid the tax. Or at least if we heard about tax saving mutual fund, the advertisement comes left, right, center on the TV. Not seen, huh? You watch a different channel, huh? Maybe you watch a different channel. On that it will not come, I think. Okay. But generally, if you see majority of the channels, you will be able to see, especially once January month starts, the advertisement will go in full swing. Because if you want to save tax before March, you need to invest. So they will start advertising left, right, center. Or you'll be able to see, consciously see, you'll be able to see the holding also. Tax saving mutual fund as per ATC and all, they will advertise. Okay, so basically there are some income tax provision. If you utilize, your tax burden will reduce. So that is one of the tasks of financial management. Meaning T for tax planning. Okay, first is what, sir? Setting the sales target. T for tax planning. O for avoiding the over investment in fixed. In my previous example, how many laptops I needed, sir? 2 classrooms, so at least minimum I needed 2 laptops. I purchased 10 laptops, full optimistic guy. I will start CS, SCCS, CPA, blah, 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 blah. Everything I want to start. And how many laptops did I buy? 10 laptops. But how much can I utilize currently for my Chennai branch? Only 2. Because how many courses I'm planning to start? Foundation, Inter and Final. I require only 2, but just because I got a deal, how much did I buy? 10. This is a wise decision or looks a little unwise? Unwise. So as a finance manager, one of your tasks is to make sure that you buy right amount of or right quantity of fixed asset. You should not over invest in your fixed asset. So that is your third aspect, STO. Okay. All right. So yes, task of financial management, we call it as STOPS. S for setting sales target. T for tax planning. O for avoiding the over investment in fixed assets. B for your balancing cash inflow with cash outflow. Sir, every month, I get money in my bank account to the extent of 2 lakh. Meaning I'll be able to sell the product and recover how much money from my debtor or cash sales? How much inflow to me I've assumed? 2 lakh every month. My outflow is 3 lakh every month. How much money I'm getting every month? 2 lakh. How much money am I spending every month? 3 lakh. That means, am I in a good position or looks like a bad position? Bad position. Can I go on with this scenario? Can I continue forever? No. If this scenario goes on forever, then that means on one fine day I may have to shut down. Yes, no? This is what we're talking about, balancing cash inflows with cash outflows. If you are getting only 2 lakh inflow, at least reduce your expenditure. Some marketing expenditure or whatever is your cost, try to reduce it or at least try to increase your inflow. Okay, this is one of the tasks of finance manager, to balance the inflows with outflows. That is your B. Last S is for ensuring that the company has sufficient amount of short-term working capital. The company should have the right amount to meet their day-to-day expenses. This is the tasks of financial management. All this can be asked for 4 marks. Difficult to remember? Yes. So short form it is what, sir? STOPS. You tell me, what is it now? Let's see. S for setting the sales target. Think that you are in examination hall. Okay, I can just go through this, explain it to you, and I can move on. It'll save my time also. But after going the exam, after going home, you need to study and try to remember, which I don't want you to. I want you to remember in the class itself and go home and just revise. That's the reason I'm often repeating it. Some of you will feel, hey, why is there so much required? Because these are all what, sir? These are all not much concept. These are all again memory driven. So let's try to remember. S is for what, sir? Setting the sales target. T for tax planning. O for avoiding the over investment in fixed asset. B for balancing cash inflows with cash outflows. Last S is for ensuring company has sufficient amount of short-term working capital. That is the tasks of financial management. Can I go for the next aspect? Sir, we told FM is a managerial activity which deals with two things: procurement of funds, utilization of funds. Why are we doing all that drama? To achieve the business objective or business goal. As far as FM is concerned, the goals can be categorized into two things. Goals could be many, but our study material is restricted to two things. One is profit. One goal is to maximize your profit, or other goal is to maximize your wealth. Profit maximization or wealth maximization. Profit maximization means what? Let's say you have two projects, or maybe I'll give you an example like this that may be helpful for you. You have two projects. One project gives you 10 lakh profit. Another project gives you 25 lakh profit. Which project will you take up? One project gives you a total profit of 10 lakh. Assumed number, it could be anything. Another project gives you 25 lakh. Voice is not audible. Is no, somebody is saying audible only for you, Amacha. You probably have muted me, da. Maybe I bugged you on the very first day. You muted me, I think. Check. Yeah, all are saying it's audible. Maybe your issue, Charan Raj. Yeah, look into it. Okay, so to come back to this example, if your profit is maximization, if it is your main motto, you will select which project, sir? Project B. Simple reason, it is giving you the highest. Easy. But if you give too much importance to the profit, there will be some disadvantages. Or if you emphasize on profits too much, there will be some disadvantages, which that disadvantage for our class purpose, we'll call it as NT or V. I've called out everything over here. N for profit as an objective is narrow. T for it ignores profit object. First I'll tell, then we'll spend a minute to understand that, then we will see. Okay. First, N for profit as an objective is narrow. T for it ignores time value of money, or it ignores the risk aspect. V, profit as an objective is vague. Now, what do I mean by that? First, we will take up this maybe. What does V stands for, sir? Profit objective, is quite vague. Vague means like our classes, nothing you are understanding. Okay, not clear at all. Vague means not very clear. Now, what do I mean by that? Profit, as an object or profit as such is not very clear because you are accounting students, at least. You have read accounts. No? Have you heard about this term PBIT? No. PBIT means profit before interest and tax. From this, if you deduct interest, what are you going to get? Profit before tax. If you have not heard it, no problem. It will come in almost every question in the next chapter or the one after that. From profit before tax, if you deduct tax, what are you going to get? Profit after tax. Yes. At least, okay, forget about these. At least these two have you heard? PBT is profit before paying the tax to the government. PAT is profit remaining after paying tax to the government. Yes. No? Now, you want to select two projects, project A and project B. Which profit will you compare and select? Will you select PBIT and do the selection? Or will you use PBT to do the selection? Or will you use PAT to do the selection? Is there any one magic formula, or different people could use different things? Maybe one particular finance manager can base his decision using PBIT. Another finance manager can decide by locking in profit after tax. Are both of them wrong, or is any of them correct and any of them is wrong, or both are correct in their own way? Both are correct. So that means profit is vague. Why do we say profit is vague? Because it could mean different for different people. Yes, because you could say like any one and make a decision, correct? No, that is the reason we say profit as an objective is vague, because it could mean different for different people. Yes, you could select different projects and come to a different conclusion. That's the reason. First one, any problem or okay? Okay now, or one more example if you want. Suppose I am an ice cream company. I will see maximum sales in winter month or summer month. If I'm an ice cream company, I'll see maximum sales in summer month. Let's say I am. So what about rainy and all? Ignore that. Let's say in my country I have only 3 months as summer. Quite possible. Some countries have only very short summers and very longer winter. You saw Game of Thrones and all, no? Winter came and went also, correct? No? Okay. Let's say winter is for 9 months. What do you think my sales will be in summer? It will be bumper. Yes. My winter ka sales will be lesser probably. Yes. That means my profit in the first 3 months will be super duperly high. But profit in the next 9 months could be quite on the lower side. Now, which profit should I take to take my decision? Should I consider 3 months profit and take the decision? Or should I choose 9 months profit and take the decision? Or should I take 12 months ka profit? Is there any magic formula, or I can decide based on my wish? Based on my wish, I can decide. Yes, no, because everything is right in its own way. Quite possible, yes, because the main component for a summer, for a ice cream company is the summer, no? So if a finance manager is locking in 3 months and deciding, is he wrong? No. But another finance manager is saying, no, I want to have a holistic picture. So I want to lock in 12 months. Is he wrong, or he is also right? He's also right. So yes, that's the reason I'm saying profit as an objective is vague, because it could mean different for different people. First a disadvantage of overemphasis of profit maximization. Did you get it? Sir, this question is quite important. It has come a few times in your examination. Like they can phrase the different ways this question. Common way they ask is overemphasizing on the profit can be disadvantageous to the company, or overemphasizing on the profit objective is bad. Explain. Okay, like this. So basically you will say yes, laying overemphasis on profit objective is bad because profit maximization objective has some disadvantages. What are those disadvantages? NTRV. In that, what did we cover first? Vague. What does vague mean, sir? Not clear. Meaning it could mean different for different people. Can I go for the next one? Next, I'll go for T. T stands for ignores. Or maybe I'll take the risk element. I'll maybe write here only. Check this example. Huh? Sir, when I just gave you this data, all of you said you will select project B because it gave you the maximum profits. Project A has very low risk. Project B has a very high risk. Now, still will you select project B, or some of them could revise their decision? Project A has very low risk. Project B has very high risk. Now, still will everybody select project B, or maybe some company can go for project A also? Project A also. Depends on what risk. If company is able to take the risk, then maybe they will select project B. Some company says, no, this project I want it to be safe. Like our branch in Chennai. Would we want to go all aggressive, or this is the first project in Chennai and we want to be a little cautious? We may want to be a little cautious. That means I may want to select a project which has a high risk or low risk. Low risk. So what is low risk for you? See, if I'm the finance manager, see your various courses in finance. CA you have, CS you have, ACCA, CMA USA, CPA USA. Like our own example, if I have to tell, we do ACCA earlier, majority of the subjects. In fact, all our ACCA teachers used to come from Sri Lanka. Because the Sri Lankan faculties, they specialize in ACCA classes. Not that Indian teachers can't teach. It is just that they specialize there. Indian teachers can teach, but they don't have the exam experience because not many of them are either CA or CS. They have not written the ACCA paper. So they may not have that clarity. So that's the reason, like, we just generally called out that the Sri Lankan faculties are best for ACCA. We used to call. Then Sri Lankan Academy one day became Goinda. Remember? Don't remember. A few months back. No. You know, the Prime Minister, President and all, they went to the Parliament, people were on the roads, created ruckus. Their inflation was around what? I think 120 something percentage. FD rate of return, I think some faculty was saying they pay 50% on their fixed deposits. Not 15, 0. In India, we get 5 to 6% on our fixed deposit. Sri Lankan government used to pay 57 because their inflation is almost 80 or 90%. Our inflation is around 7 to 8% in India. Now it must have come down. I'm talking about old strong there. Okay. In fact, many of the flights and all were cancelled. We had to do from physical class, we had to shift to online class because faculty could not come. We had booked the tickets, hotel, everything was done. But unfortunately, airline only was not functioning. Now you tell me, if I open a branch in CA or Chennai, I would like to start with ACCA coaching class or probably CA coaching class. CA coaching class. Maybe ACCA is more profitable, but CA is less risky. Correct? So keeping the risk element also, you need to select. Just you can't base your decision entirely on the profits. That's what I'm trying to say. Did you understand this? So if you place emphasis only on profits, you will ignore one more component, which is what, sir? Risk. That is what I've written over here. Profit as an objective ignores the risk element or risk factor. Now is it okay? Sri Lankan government collapsed. Yeah. Now I don't know the status. Yeah, back then, yes, it was a problem. I think now they appointed another. I don't know whether they have president culture or prime minister culture. I'm not very sure. I think it's presidential candidate is what they go by. I think new president is appointed. I've not updated myself on that. Any which way, that's okay. But more importantly, this one, did we understand that they'll manage? Sri Lanka, no? It's okay. They'll manage. Yeah, ours we will manage. Yeah. So we got the two things. Can I go for the next one? Which is what, sir? This one I will take. T. T for it ignores time value of money. Okay. Let me give you another example or carry forward this example only. Sir, if a company takes project A, no, they have to invest the money for 2 years. First year they need to invest. Second year also they need to invest. You will get inflow only from third year. Reliance Jio Dandanadan. You know how they started their business? Jio Dandanadan. Simple concept. Give everything for free. The whole country came into their hand just by giving one offer. Very simple offer. Give it for free. So they gave it for free. That does not mean their cost. They did not incur any cost at all. No, they incurred heavy cost, sir. SIM cost, connection cost, data cost, everything. They only took it upon themselves. That means heavy loss. They invested heavily for 1 or 2 years. Now they're recovering. Yes, no. So outflow was for 2 years. Inflow will come only from third year. So did you understand that? In my example, I'm assuming. Maybe for Reliance, I think they gave free only for 1 year, if I'm not wrong. Okay. But this project, I've assumed that first year you need to invest. Second year also you need to invest. You will get the inflow only from third year. Is it okay? There is another project B. It gives you high profit, but you need to invest for 4 years. First year also loss. Second year also loss. Third year also loss. Fourth year also loss. From fifth year onwards, you will start making a lot of money. This is for project B. Now you tell me, as a finance manager, which project will you decide? Project A is giving you only 10 lakh profit. Project B is giving you a bumper profit of 25 lakh. Which one will you select? Now, if I give you this information, forget about this. This information, if I give you, which one will you go for? Depends, correct? No? If company is cash rich, now all of you shop on Amazon, Flipkart to Big Basket and all this. Majority of the startups are, do you think, are profitable? Zomato, Gimato and all, do you think they are profit making companies or loss making companies? They have hardly even break even. You know break even means? No profit, No loss. Meaning if you invest 100 rupees, how much will you recover back? 100. Meaning did you make any profit? No. Any loss? No. They have not even broken even, sir. That means they are still a loss-making company. How are they able to survive? And every time you buy, 10% cashback, 15% discount, bumper offer, 40% discount. How? Because they have enough cash. So that means they don't mind waiting till 5 or 6 years before they can recover the money. Suppose I want to start a food delivery app. Zomato के बदले में mine is tomato. Same logo with the red color only. Okay. Can I wait for 5 years before I'll be able to see profit? They are cash rich organization. They can wait for 5 years. Is it necessary? I also have to be that much cash rich? No. I'm a small player means, do you think now I can take up this project or I will take up project A now? Because I want the recovery of the money sooner. If that is the case means I will go for project A. So again, just if you give importance only to profits, which project you will end up selecting? B. But do you have enough cash power to survive in the business for 5 years? No. So if you go for project B and if you are a small company, maybe a second year, third year only, you are Diwali. Closed down. Correct? No. That is one of the disadvantages of giving too much importance to profit. Because it ignores the time value of money. Time value of money means there is a big difference between recovering the money in year 3 and recovering the money in year 5. That is the time we are talking about. Okay. So profit objective ignores one more element, that is time value of money. So have we discussed few things now? What are the disadvantages, sir? N, T, R, V. N for narrow. T for ignores the time value of money. R for ignores the risk element or risk factors. V for profit as an objective is not clear, meaning it is vague. Yes, everything we have discussed except narrow. Narrow means chota. Profit as an objective is too small an objective. Is too small an objective. Meaning, see, if you want to survive the business in the long run. Now, let's say as an academy, if I want to give the coaching for the next 50 years, my goal is I want to be in the coaching business for the next 50 years. Meaning my son, my grandsons, everyone should be able to earn. That is the objective. Is it okay? So I want to stay in the business for 50 years. Just by keeping profit, can I grow up? Just by maximizing the profit, can I sustain? Or I need to take care of few people. Who are those people? My teachers, my employees, and the society also. Yes, no? Because if you are functioning in the society, suppose you got a job offer after clearing CA, XYZ Private Limited, and another job offer from Tata Company. Same money, same offer. One is a private limited company, Chota company, you have not even heard about it. Another company, Tata. Which one will you join? Same money. Which one will you join? Tata. Why? Reputation. How did they build that? Just by profits. Huh? During COVID time, almost Tatas were there everywhere. Yes, no. In fact, like Tatas are one such company. Almost 65% of their shares are held by charity. Meaning 65% of their money that they get, the group money goes to or is used for charitable purpose. That is one of the reasons Mukesh Ambani is in the billionaire list and Ratan Tata is not. Actually, Tata is a bigger company than Reliance. Maybe now I think they may be equal or maybe Reliance is taken over. But until few years, Tata was a much bigger group. But you never saw Ratan Tata in the billionaires on that Forbes billionaire list they will release. Tata never features, forget about top 10, not even top 50, Ratan Tata will come. Because 65% of their shares he is given off to charity. It's held by charitable trust only. So that is the reason. Is that okay? So again, what I'm trying to say is if you want to survive all of you said Tata because they have done so much to their employees, to their customers, to their society. So just by profit, you cannot sustain in the business because profit as an objective is too narrow. If you want to sustain in the business, you have to take care of your employees, your customers, your society, etc., etc. So if a company ka sole objective is profit, then they will start ignoring their other pillars like employee, society, etc., etc. Then their downfall will start. So hence, this is the advantages of giving too much importance to profit. Any problem, people? No, okay. No. Sir, it will be like this only, sir. No, sir. I said no theory. 1 or 2 topics are only theory. Rest are all Out in all practical papers only, but we are giving equal importance to everything. So far, okay? This approach is okay for you? So everything we will learn inside the class only. Any confusion if you have, I shall wait or I shall move forward. What is it? Forward march or stop? Or matlab, clear? Okay. All right. So after profit maximizations, the next best objective is wealth maximization. So wealth maximization, or they may give the question like this also. Explain profit maximization versus wealth maximization. This aspect or this topic is quite important as far as the examination goes. It has been asked quite a few times. It may come in your attempt also. I don't know. It is important, that much I can tell. Okay. Now, what is this wealth maximization? Sir, simple funda, sir. I gave you this and all. No? When I give you this data, for project A, you're getting cash flow from which year onwards? Year 3. B, you're getting year 5 onwards. If I give you this data, some of you told that select which project? Project A, because you are able to recover the money faster or sooner. Yes or no? So that's one approach for wealth maximization. Or how does it work? Let's look at a small example maybe. Let's say, sir, or how does a wealth maximization objective work is? Sir, if you want to do some project, you have to invest some money. If you want to do, like, if you want to open a branch in Chennai, we have to invest money first. Then only we'll be able to recover. So, I have to invest the money now. No? That now, in FM terminology, we call it as year 0. Year 0 means today, now. Okay. Let's say how much money I told, sir, we need to start that academy? 10 lakh rupees. 10 lakh is coming to me or going out of my hands. 10 lakh is coming into my hands or going out of my hands. I'm investing. So it is going out of my hands. Correct? No, it's an outflow. Yes, no, sir. If there is a project, means project will have inflow also. It will have outflow also. Correct? No. So first year, how much is the outflow for me? 10 lakh. Outflow, I am showing it in negative. Inflow, I will show it in positive. If I do this project now, I will get the inflow for a period of 3 years. Assumption. It could be any number of years. I'm restricting myself to 3. First year, let's say the company will be able to recover 5 lakh rupees. By doing this project, they immediately have to invest how much, sir? 10 lakh. And by the end of first year, when I say 1 year, no, it is not year 1 beginning, it is year 1 end. And 2 years stands for end of second year. 3 years stands for end of third year. Year 1 beginning, we write it as year 0. This is okay. By the end of first year, I am assuming we'll recover 5 lakh. By the end of second year, again we will recover 7 lakh. By the end of third year, we will recover 15 lakh. This is okay, sir. So how much did I invest? 10 lakh. How much am I totally recovering? 27 lakh. So that means, am I making any profit? Yes. How much is my profit? 17 lakh. Agreed? 10 lakh is my outflow. 27 lakh is my inflow. My total profit. Don't worry about revenue profit, capital profit and all. We are not in accounts. We are in FM. We are talking about total profit for the company by this project is 17 lakh. Agreed? Yes, sir. I can't do this comparison. Why? Can anyone tell me? Straight away, I can't compare these two data and take a decision. Can you tell me why? Perfect. Inflation. Sir, check. What or maybe, let it be, and just Baju mein I will write. I think it will be easier. Sir, this 10 lakh, when did you invest, sir? This 10 lakh, when you have to invest? Today, or can I say now? Yes. This 5 lakh, are you getting now or are you getting at the end of first year? This 5 lakh, you're getting now or end of first year? That means this is now ka value or is it future value? Future value. Agreed? Because this 5 lakh, you're getting at the end of first year. Meaning you're not getting this now, you're getting it at a later stage. Hence, I'm calling it as a future value. How about this 7 lakh? You're getting it now or at the end of second year? That means this is also now ka value or future value. How about this 15 lakh? Now value or future value? Can you compare now ka value with future value and say this much profit, that much profit, or are you doing apple to orange comparison here? You're doing, this is an apple, this is an orange, because are they same or are they different? Because it is having 27 lakh after, by the end of third year is very different from having 10 lakh. No. If you want to compare, means either both of them have to be on the future value ka platform or both of them have to be on the now ka value ka platform. Yes, no, that to now value only we call it as in FM terminology, present value. Some of you would have done it in your mathematics in your CA foundation. Present value, future value. This 10 lakh is the present value, whereas this 27 lakh is the future value. Can I straight away compare them and say this is the profit, that is profit, and do the decision, or that would be wrong? So first what I have to do is, from this future value, I have to find out what? Present value. Let's say present value of 27 lakh comes to 20 or maybe let's say 17 lakh rupees. There's a way to calculate that, same as you have done in mathematics, which we will see in the Aage ka chapters. Let's not worry about it now. Let's say we calculated the 27 lakh is what value, sir? Future value. We computed its present value, and how much did you get? 17 lakh. What is the 17 lakh? Future value or present value? Present value. And what is this 10 lakh? Present value. Now can you compare these two and draw some conclusion? Yes, because both of them are on what value? Present value. Yes or no? This is what wealth maximization objective is all about. It doesn't work using profits, it works using cash flow. So it does not use cash flow approach, rather it does not use profit approach, rather it uses cash flow approach. Meaning every cash flow it tries to get to the present value and then tries to analyze it. This is a much better analysis. Agreed or not? As somebody pointed out, the value will change due to inflation. Some of you would have studied inflation any which way. Inflation is simple. Those of you who came through direct entry system. Suppose you were able to buy, let's say, one pen now for 100 rupees. One pen you are able to buy now immediately by paying how much rupees, sir? 100. After 1 year also, do you think you will be able to buy the same pen using 100 rupees? Or its value would have got changed? Possible that value, pen ka value or pen ka price would have got increased. Let's say at the now the value of the pen is 100 rupees. At the end of year 1, the pen ka value has become 110, or maybe we'll take it as 107. From 100, the price of the pen has become 107. So how much percentage increase? 7% increase. That we call it as inflation. Is it okay? So if you want to buy the same pen at the end of first year, can you do it with 100 rupees or you need to have 107 rupees with you now? You need to have 107 rupees with you. The 100 rupees is your present value. This 107 is your future value. This is okay. So if you want to take some decision, you have to bring everything to a single platform. And that is how wealth maximization objective work towards. This is okay. So hence it does not pay much attention to the profit. Rather it gives more importance to the cash flow. Sir, we said profit as an objective has one other disadvantages. NT. What does that T stand for? NT. Ignores the T for ignores time value of money. Which objective ignores it? Profit maximization. Does wealth maximization consider the time value of money? Absolutely yes. Because what are you trying to do over here? From future value, you are trying to find out the present value. Yes or no? So are you not giving importance to the time here? Yes. So wealth maximization objective does give importance to what, sir? Or rather it applies the time value of money ka concept. This is okay. So basically disadvantages of profit maximization objective becomes advantages of wealth maximization objective. Okay. And here we also do something known as cost benefit analysis. Meaning what are you comparing here? You're comparing inflow with the. That is what we mean by cost benefit analysis. Cost is your outflow, benefit is your inflow. So that's what I've written over here. So this approach works on the cost benefit analysis. That are some pointers relating to wealth maximization objective. Easy, sir? Okay, sir? Or move on, sir? Or matlab any clarifications, sir? Move on. Okay. Now you tell me, there's also one other way in which they ask this question. List out the advantages and disadvantages of profit maximization objective. Disadvantages you already know. What is those? NTRV. N for narrow. T for ignores time value of money. R for ignores risk. V for It is vague. That you know. Disadvantages of PM as in profit maximization is covered. Advantages. Advantages. You didn't tell only. Yeah, I'm asking you. Easy to calculate. No? You know, company means you have to follow P&L. Do you have any profit format in which you prepare P&L? No format. You have Schedule 3 Part 2 of Companies Act of 2013, which gives you P&L ka format clearly. Not done. Done in your BCom somewhere. If you have not done, no problem. We learn it in accounts. Preparation of financial statement is there in your account. Meaning how to prepare P&L. There is a clear-cut format. Okay. Revenue from operation, other income. Like this, we have various clear format through which you can prepare and easily calculate the profit. So it's easy to understand, easy to calculate. Two simple advantages, can you remember? Easy to understand, easy to calculate. Disadvantages you already know. Okay. Now wealth maximization ka advantages and disadvantages, can you tell me? Profit maximization ka disadvantages becomes wealth maximization ka advantage. So tell me, wealth maximization, does it ignore time value of money or it considers? It considers. Okay. Then does it consider the risk element? Yes. From present value, you are recomputing it, or from future value, you are computing the present value. Using the risk factor only, you will compute that. How to calculate, we'll see it later and all. So basically, wealth maximization objective considers time value of money. It also considers the risk factor. And it is long-term in nature. Okay. Or simply you can write NTRV ka ulta. Here, you can say it is not narrow, rather it is very wide. Instead of that, you say it is a long-term in nature. Instead of wide, you say long-term in nature. And in T here you will say it considers time value of money, and there R, instead of R you can say here it considers the risk element. Like that you can stop it at there. Is it okay? This is advantages of wealth maximization. Disadvantages, difficult to calculate. P&L has a specified format, but wealth maximization, does it have specific format? So just now you wrote the format, no? Yeah, but to calculate from future value to present value, no? If you remember in mathematics, you need one important component known as I for interest rate. In fact, you used to write here, remember, the present value is nothing but, or rather you used to write future value, I don't know, mathematics you must have used this formula, present value into 1 plus I or 1 plus R, what you used to write? 1 plus I whole power n. That's what you used to do it in your mathematics. Those of you who have done CA foundation, others who have not done, not a problem. Is this okay? Right? Here the main culprit is I. In your examination, I was clearly given 8%, 10%, 15% like this. Practically, how will you determine I for a company? I'm the company now, ArivuPro. Can you tell me interest rate for ArivuPro? Interest rate for our company. State Bank of India ka fixed deposit rate is 5%. Can I use that? Can I use that? Okay. Stock market ka NSE index, you know, BSE, NSE, that index ka average return is around, let's say, it is around 12 to 13%. For simplicity, let's take 12%. Can I take that? Stock market ka, you know, Nifty 50. Yeah, Nifty 50 ka index rate is 12%. It gives you every year on average. If you invest in Nifty 50, it gives you on an average every year 12%. Can I take that 12% as I and do my calculations? Okay, I have another crypto market where I is actually, you don't know. It is plus 30-50% also, or it could be minus 1000% also. Today you invest the money, 100 may become 1000 also, or 100 may become 0. Let's say crypto market on an average gives 100% return every year. Actually, which is true. Bitcoin on average has doubled. Every year its return, if you just check, it is 100% Bitcoin. Historically, if you do from the beginning, and from the beginning, if you have invested, means you would not be doing CA at all. You would have hired a lot of chartered accountants like us and given us the job. Yeah, actually, yes. I think 10,000 rupees invested in Bitcoin around 2012 is worth 10 crore rupees now. Yeah, that much. Okay. So did you invest? Unfortunately, no. Yeah, okay. So that means, can I consider crypto market ka interest as I and calculate? That means you got the problematic area. It's easy to say, but difficult to lock in. So that's what someone said out there. Difficult to calculate. But how will we calculate in exam, sir? They will give you I. Why are you worrying? We are discussing the practicality. This is okay, but in your examination, they will only clearly give you the interest rate. But practically, it is very difficult to lock in one rate. Okay, so you'll have to kind of do a lot of hypothesis and do a lot of testing and then back it up. It's not that easy. Did you understand this? So one of the disadvantages of wealth maximization is what, sir? Difficult to calculate, meaning you don't have any magic formula. So that is the reason. This is okay. If it is difficult to calculate, can you decide or can you make the decision easily, or it will give you some headache? Decision. If you can't freeze this only, can you take the decision? So that means the decision making is also a little difficult. That is what I've written it as a disadvantages over here. Did everyone understand? So how much more, sir? Yeah. 2 more concepts and then we are done with respect to this chapter. Okay, Nasaru? Oh my God. All right. Any confusion? Next one. No confusion? Move on to the next. All right. Let's see how well you remember or how much of it you remember. Give me a recap. 5 minutes, you should be able to revise everything now. Let's see. First is what? For decision of a new business. Yeah, this is where you talk and I nod. How many fixed assets needed? How much will it cost? How much money for day-to-day operations? Fourth one, from which source will you raise the money? Okay. FM is a managerial activity which deals with 2 things. Effective procurement of funds, effective utilization of funds. Okay. Procurement of funds is in order to take care of procurement of funds, we consider 3 elements, which is RCC, risk, cost, control. Keeping these parameters in mind, we decide from which source to finance. And then utilization of funds. Funds will be utilized either for 2 purposes. One is to either invest the money in fixed asset or to invest in working capital. So investing in fixed asset is done through a specific technique known as capital budgeting. And how much working capital you should have? You should maintain an optimum level so that your business functions smoothly. How to find out that? Have we discussed that, or next chapter? Separate chapter is there we'll be discussing. Okay, then what did we discuss? Tasks of financial management or finance manager, which we used to call it as STOPs. S for setting sales target. T for tax planning. O for avoiding the over investment in fixed asset. B for balancing inflow with outflows. Another S is maintaining sufficient amount of short-term working capital. Okay. Then we saw objectives of FM. 2 main objectives: profit maximization and wealth maximization. Profit maximization means whichever project gives you highest profit, you will select it. You choose that. But giving too much importance to profit can be disastrous to the company, meaning profit objective has some disadvantages. What are those? NTRV, meaning profit as an objective is narrow. Okay, because you can't grow just by keeping profit objective. You also need to keep the interest of employees, customers, society also. And profit as an objective ignores time value of money and it ignores risk element. Profit as an objective is not that much clear, meaning it is vague, meaning profit could mean different for different people. Better suited objective is wealth maximization, or wealth maximization is better objective because it works using profit approach or cash flow approach. Cash flow approach. Does it consider the risk element? Yes. Does it consider the time value of element? Yes. So you do this analysis by something known as, or you do something known as cost benefit analysis over here. Okay. So that's how wealth maximization objective works. But wealth maximization objective has some disadvantages, meaning it is not easy to calculate. If it is not easy to calculate, it may not be that easy to take the decision also. That is a disadvantage. Hardly took us 2 minutes. We spent 1.5 hours, but we are able to summarize it in 2 minutes. In your home, how much time will you take to revise this? 5 minutes, 10 minutes maximum. So that means whatever I'm saying, am I abiding by it? Can you go home and do this? All right. Can I move on to the next topic? Next chapter. Still we have 3 more topics and we are done with this. Role of a CFO or a finance executive, which we will call it for our class purposes bimorph. Role of a CFO. Buy more. First B is for budgeting. I for overseeing the IT function. M for managing mergers and acquisition. O for outsourcing. R for risk analysis. P for pricing analysis. H for overseeing the HR functions. So these are some of the task or some of the role of a chief financial officer. CFO, not UFO. CFO. CEO, CFO, we have no finance officer, his main executive. Again, a question which has come quite a few times in your examination for 3 to 4 marks, they ask. Explain the role of CFO. Simple, we call it as buy more. B is self-explanatory, which is what, sir? Budgeting. Before you do any activity, we should have some plan. Meaning, what are we going to do in the next year? You should have the plan now only. Then only you will be able to decide whether your project was a success or whether it was a failure. Okay, so budgeting is one of the important tasks of a CFO. Then I for what, sir? Overseeing the IT function. See, these days IT is not a luxury, it is a necessity. Like we are in coaching business, but we still have our own app. We have our own app. Yes. Why do you think we invested in app? Because many students wanted recorded classes. In fact, our recorded students are more than live online and face-to-face students. Recorded students are too many. That's harsh, reality. Because these days, see, someone is there in, let's say we have some student in Delhi. Can he come to Bangalore to take coaching, sir? He can, but do you think he would like to invest that much time and money just to travel and to get adjusted to the culture, the food, and he'll miss his family environment, entirely new ambience? He may not, yes. But majority of the coaching centers in Delhi, they teach in Hindi. Maybe he wants it in English. Maybe for the namesake, he's Delhiite. Deep down, he's maybe South Indian. Who knows? Yeah, possible. Yes, so like, what do you think he will do now? Will he come for face-to-face classes or he'll buy our recorded lectures? Live online, he feels the internet connection is unstable. It comes, it goes, like our classes only. Some we will understand, some will be bouncers. So he says internet connection is not stable. That means only option for him is no what, sir? To buy the recorded classes. How will we give him the recorded classes? Through our app. Our main objective is to teach. But to do that activity, we need to take the help of IT. So that does not mean everything we will buy. No, there are 101 apps, 101 features. Everything can be installed. Our student, when we started the app also, initially we didn't have a speed control option. I think we had, but it was what? Normal and directly 1.75. Or 1.5 and 1.75, something like this it was there. Some of the students told, sir, we also need 1.25. Because majority of our recorded classes, recorded students, they don't watch it in normal speed. They find it to be little slow. But we have to accommodate every kind of student. That means we have to speak a little slowly only so that everyone is accommodated. But some of them may feel our pace to be quite slow. So they will watch all our classes in 1.25, 1.5 like this. So we had to bring in what feature now? Speed control option. Someone said, sir, we want to download the class and watch. That means we had to invest in what feature? Download feature. Some of them said, my internet speed is very bad, sir. I only have 1 GB every day. Your one class is 1.5 GB. I want to see, but I don't want to see you so much also. I want to watch other things also. So hence we had to bring in quality control feature from 240 pixel to 720 pixel. So that means we decided based on our needs. So that is one of the role of finance manager. Overseeing the IT functions. What all IT features we require for our business. Is this feature applicable for every academy or they will choose based on their own needs and requirements? These was our requirement, so we invested there like that. Does it mean we will stop investing? No. Technology will keep on growing and we have to grow along with it. Okay. So did you understand more importantly what it is? I for overseeing the IT function. M for what, sir? Mergers and acquisition. See, if you want to become a pan-India academy, or if you want to become a pan-India business, or you want to become the world's #1 company, that means you have to buy few companies. Can you operate in every country? Can you operate in every country? Can you open one location there and start right away? No. If you want to open, suppose you are there in India, You want to open, let's say you want to start your operation in Singapore. The best way to do that is buy a company which is already operating in Singapore. Because they anyway have invested in fixed asset. They have human resource. They have network. They have marketing, everything. You just give them little extra and buy out their company. That means automatically their company became yours. This way only Reliance and Tata's and all have grown that much. If you have time, just watch a YouTube video on Tata's empire. You'll be shocked. Literally shocked in how many countries and how many products they operate. YouTube may just search Tata Ka business empire, you will get the video. Literally you will be shocked. You will be, you don't even know that in that many countries and all they're operating. Almost in every country they're there. They have thousands and thousands of products. Do you think they went up or they acquired? Acquired. Land Rover is acquired by Tata. Land Rover, Gadi, Zoom, and acquired by Tata. Starbucks also in India is a venture of Tata. 50% joint venture belongs to Tata. Okay. Some of the hydro projects and all, hydroelectric project in Zambia and Namibia and all they've invested. Coal project and this and all. So one way to expand the business is acquiring the company. Okay, mergers and acquisition means going ahead and acquiring the businesses. Which business? Finance manager has to decide that, whether it is worth acquiring. That is the M part. Okay, na sir? O for what, sir? Outsourcing decision. Sir, our academy ka bread and butter is what, sir? Teaching. Teaching, we have faculties in-house. Alright, so we looked at M. Next, we are looking at outsourcing. As I said, our bread and butter is teaching. We have faculties in-house to take care of teaching. But to provide the teaching, I told we also need the help of app. Do we have the people to develop the app? So to develop the app, you need not commerce graduates. You need someone with the IT background, engineers probably. Yes, we don't have any engineers on our team, but we still need to develop that app. What do? Outsource this function. Approach a technology company and give them money and tell, I need the app with this specification, build it for me. That's what we did and that's what they built it for us. That means we have outsourced our what function? App function. So this is the only function you can outsource. No, some company may want to outsource their accounting function. Any of your articleship students here? Articleship students. Okay. Your firm, do you do accounting service? So that means you're doing accounting for your CA firm or for a client? Client. So client has outsourced accounting function to a CA firm because they feel it is a headache. Appointing or giving this function to an outsider is much easy. So that, or you could outsource marketing function. Social media marketing, we have these days, it is fancily called as digital marketing. Because than your newspaper ads now, how much presence is there in your Instagram, LinkedIn, YouTube and all matters more. Yes or no? So I think we may not have expertise in that area. So we may want to outsource that function. So that is your outsourcing wala decision. What to be outsourced depends from company to company. Did you understand that? Okay. Oh, R is for what, sir? Risk management. So as a finance manager, you should be able to decide, or as a CFO, you should be able to decide how much risk are you willing to take. So you have to determine that risk element. Okay, how to measure it, you'll have to see. We will see it in one of the topics. Okay. All right. P for pricing analysis. Now you have joined our academy, means you would have paid some money, fees, no? Let's say for your coaching, you're paying 30,000 rupees. I don't know the fees. Later, don't fight with somebody. Just a number I have taken. For CA Inter, I've assumed the fees to be 30,000. Just like that, I decided 30,000, or did I work it out by keeping few things in mind? I have to work out this. Yes, no. How do you, or what are the things I will keep in mind and work out, sir? First, I will find how much is the cost to give the teaching service. Let's say the cost to teach one student is 20,000. Assumption again. Teacher cost, employee cost, rent, to electricity, building, everything put together. If you allocate to one student, how much does it come to, sir? 20,000. Is it okay? Or maybe let's say 25,000. Okay. Can I price it at 25,000? My cost is 25. Can I also price my course at 25 and sell? Because I'm doing business means obviously there has to be some profit element. Maybe I'll say my profit margin is, let's say, 20%. 20% of 25,000 is 5,000. Correct, no, sir? So that means what would become my cost, course revenue or selling price? 30,000. So this data has to be worked out by the CFO, meaning his responsibility. It's not that he has to sit and do it, he has to get it done. Do it himself or appoint a team to make sure. What should be the price of your product or price of service? That determination is an activity of a CFO. This is your P. Last is your H. H is your HR function. Human resources are the most important assets of every organization. So that means just by giving salary, you cannot retain them. You also need to take care of them. That is the reason you see many companies these days giving ESOP, taking them to parties in abroad, Goa, weekend party, month-end party, quarter lunch, team lunch, that lunch, this lunch. Have you heard about this? Yeah. Why do you think they're doing all that? Because anyway, company is giving salary. Chumma, they should come and work, no? Why the team lunch or activity bonding or the ending or no? Because those are required for the company to retain the employees. So what and all should we do under HR function to retain the employees is also one of the tasks of task of CFO. We can call it as buy more. B for budgeting. I for overseeing the IT function. M for managing mergers and acquisition. O for overseeing or outsourcing function. R for risk analysis. P for pricing analysis. H for overseeing the HR functions. That is a task of CFO. Can I go for the next one? Next aspect is financial distress. Sir, my cash inflow is 1 lakh. My cash outflow is 3 lakh every month. Good position or bad position? Bad position. This we call it as FD. FD means financial distress. If my outflow is greater than the inflow, if my cash outflow, if it is greater than inflow, or if my inflow is lesser than my outflow, such a scenario we call it as financial distress. Got the meaning? If my cash inflow is not sufficient to pay my outflows, we call such a scenario as financial distress. If this scenario goes on for 3 to 4 years or many years, one fine day, what will happen? The firm will be shut down. That scenario we call it as insolvency. Insolvency is a scenario created by continuous FD, continuous financial distress. Meaning if financial distress goes on continuously, then one fine day the firm will become insolvent or liquidated. Easy now? That's all. Shorter topic. Can we go look at the last topic or aspect of this particular topic, guys? One more and then we are finally through with this. Which is agency problem versus agency cost. Okay, let's take a small scenario and then we'll come back to that chart. Sir, company means it will have some owners, correct? Okay, will owners take all the decision in the company or it is taken by a selected few people? Selected few people will take the decision, which we call it as board of directors, correct? Yes, or for simplicity we can also call it as MGR, as in managers. Can I say owners? What do they do, sir? They give money. Means can I say owners, instead of owners, can I say it as providers of finance? Owners are providers of finance, but management or decision making is taken care by whom, sir? Decision of the company is taken care by the manager or the board of directors. Easy. This provider of finance could be equity shareholders, or it could be preference shareholders, or it could be bank people, or it could be debenture holders. Doesn't matter. Whoever want, they can provide the finance. But managing the finance is done by the board. Okay. Now you tell me, a board of directors may be owners of the company or they may not be. Could be. Generally, in board of directors also will have some shares in the company. In fact, majority of the companies they will only have the majority share. But is it a mandate? No. Okay. They may be owners or they may not be owners. All right. Now you tell me, board of directors, they should take the decision keeping whose interest in mind? Board of directors should take all the decision relating to the business, protecting whose interest? Company, rather providers of finance interest, can I say? Yes, if it is beneficial to these guys, then the decision should be taken. If it is not, then it should not be taken. Correct, sir? Yes, everybody, or any problems? Okay. Suppose board of directors or managers, no, they are taking the decision by keeping their interest in mind. Whose interest in mind they should actually keep in mind? Providers of finance. But whose interest in mind they're actually keeping in mind and taking the decision? Their own interest. They're self-centered people. They are taking care of their own. Is this okay? If that is the case, means we call such a scenario as agency, bro. Okay, maybe I'll just summarize this for you. 1. Can I call this guy as a principal and can I call this guy as an agent? Is this okay? Agent is the guy who executes. Principal is the guy who oversees. Yes, no? So providers of finance are the principal, board is your, or manager is your agent. So between these two guys, what kind of a relationship exists? There exists what kind of relationship? Principal and agent. That is the first point I've written. Principal and agent relationship exists between providers of finance and manager. Is this okay, sir? Yes. So ideally, manager should take the decision by keeping whose interest in mind? Ideally, all the decision manager should take by keeping whose interest in mind? Providers of finance. That's what I've written here. Manager should keep the interest of providers of finance in mind and make all the financial decision. Is this okay? That is the ideal scenario. But what is manager doing over here? He's keeping his own interest in mind and taking the decision. And that scenario we call it as what, sir? Agency problem. So give an example. Okay. Let's say I am the manager of ArivuPro Academy. I'm the manager or the damager. Okay, now. So the board has given, the providers of finance have told me, you run the business. Okay. All right. You know what they told me? Higher sales, higher your salary. The more business you generate, the more sales you generate, we will give you more and more salary. I got excited. I called all the teachers and told, every day teach for 8 hours. Continuously go and teach for 8 hours. They told not possible. Said, you are fired. Teach for 8 hours or get lost. Simple funda, I gave simple. They told, just an example, not happening. Yeah. Alright, just an example. So I told all my teachers, what sir, teach for 8 hours every day. No Sunday, no Yugadi, Deepavali, nothing. Teach for 8 hours every day. That's it. Come and teach. I told all my employees, 13 hours work daily. Okay. Because my funda is simple. If teacher take more classes, then we will be able to take more batches. Meaning more students will come. More students come means ArivuPro will get more business. Meaning ArivuPro ka sales will increase. Ultimately, my salary will increase. That is my main funda. This is the way I'm planning to increase. Is it okay? And my plan is very simple. 2 years I will do this. Then I will quit the company, join another company. My funda is very simple. Okay. Now you tell me, if this is my plan or if this is my action plan, can academy survive in the long run? Maybe one batch teachers and employees will compromise. Second batch, because see, teaching is a physical activity. In fact, my own personal experience, I don't teach more than 4 hours these days. There were days where I used to take some 8 to 9 hours class initially when I started. 7 years, 4 or 5 years before I used to teach. We used to have morning batch, evening batch. We used to take a lot of classes and all. I had a lot of throat problems. In fact, I never call off generally the classes. If I say class starts at 5:30, by 5 o'clock, generally I am in the academy and 5:30 exactly the class will start. Some of you who attend the class will know this. Ending time may slightly change, but starting time is always pakka. Because my funda is simple. I want to finish the syllabus within the allocated time. That's the reason I make it a point to make sure that I start the classes on time. Indirectly, I'm telling you don't be late. Or directly, I'm telling you please come on time. Is it okay? Because I'm very particular about that. I don't like to wait for you, nor will I make you wait. Simple principle. You come on time, I'll also come on time. Both of us will try to finish on time and go. Simple principle. Okay. Okay. Coming back over here. What was I explaining? I think I got deviated. All right. So the funda is, see, in one batch, maybe they will compromise. The teachers will compromise. Afterwards, they'll say, sorry, boss, it's not happening. My health is taking a hit, and they may quit the organization. Yes or no? If teachers quit, teachers, see, if you are in a teaching industry, then teachers are your biggest assets. Yes, because some of the academies, students go to the academy only because of the teachers. If that teacher is not there, maybe some student may not like to come to that academy. Quite possible, it happens, especially in CA final. It's totally teacher driven market. Inter also, it's these days it's happening. Anyways, are we okay with this? Now with this approach, if I make this plan, do you think it is beneficial for the company, sir? Is it beneficial for me as a manager? Yes. But is it beneficial for the providers of finance? Why? Because I am taking decision based on their interest or my interest? My interest. Such a scenario, we call it as what? Agency problem. Did you understand the meaning now, everybody? Okay, na? Confusion. Got it? All right. First scenario done. Next is what, sir? Agency cost. If there is a problem, means you should sort out that problem. And to sort out that problem, you have to incur some. See, if you want to find some solution, means you have to invest some money. So to sort out this agency problem, we incur something known as agency cost. Meaning to monitor the action of the managers, no? We incur some cost, and that cost we refer it to as agency cost. Like, what do you mean by that, sir? So if this scenario is happening, means maybe providers of finance may appoint somebody known as senior manager to track my action. Possible. Correct, no? So that means senior manager will come and work in the company for free of cost. No, we have to pay him some money. So that money we call it as agency cost. Did you understand that? So agency cost is a cost incurred to sort out what problem, sir? Agency problem. Okay, give me a couple of pointers then, let's see. There exists what relation? There are two people over here. There are two sets of people over here as far as this concept goes. One is a principal, another one is an agent. Principal is whom? Providers of finance. Agent is whom? The board of directors or the manager or the finance executive, whatever. Alright. So who takes all the decision? Manager. Whose interest should be kept in mind and manager should take the decision? You should keep the interest of providers of finance. But if manager considers whose interest? His own personal interest and takes the decision, then such scenario we call it as agency problem. And to sort out this agency problem, we incur a cost, and that cost ka name is agency cost. Are we okay? All right. To go into more practicality of things, one, generally there are two types of providers of finance. One who give the loan, another one who give the equity. Equity shareholders and the bank loan people or the debenture holders. So what about preference shareholders? Generally, many companies don't raise the money giving preference shares. Why? I'll tell you, there is a specific reason for that in chapter number 4 or chapter number 5, we will say. Debt plan is better than preference share plan. Some we will discuss later on. Is it okay? That's the reason I'm only categorizing as two. What are the two things I'm calling? Equity or debt. Yes. So these are the two guys who will provide us who will provide the company the finance. So how do you sort out agency problem of debt, guys? The people who have given loan, how do you sort out the agency problem from their perspective? Is one common way the problem is sorted out is by imposing something known as negative covenants. Negative covenants. So what does this mean? Let's say, sir, we have borrowed, let's say, 1 crore rupees from State Bank of India. ArivuPro, just example, we have not borrowed that much money. Okay, ArivuPro has borrowed 1 crore rupees from SBI. SBI told no problem, we'll give it to you. We asked for 1 crore and they gave how much? 1 crore. But SBI, they put one condition. You know what they told? What they told, sir? Don't borrow any more money from me or from somebody else. Meaning the maximum loan that you as a company can take only is how much, sir? 1 crore. And that 1 crore, SBI is telling, I only will give you. Beyond 1 crore, you cannot take even a single rupee more borrowing. This is okay because borrowing is risky, no? Because if you take more and more borrowing and company is not generating enough money, then what do you think bank people, what will bank people do? They will seize the asset and they have to sell those assets and recover the money, which we learned, or some of us must have heard about it as non-performing assets, NPA. No problem, we learn it in advanced accounting. It is there in banking chapter. Okay with this, everyone? So here to SBI, to protect their interest, they have imposed some restriction, or they have imposed specifically borrowing restriction. That borrowing restriction, we call it as what, sir? Negative covenants. Did you understand that? So some restriction. So that way, see, if I don't borrow any more money, that means SBI ka interest is protected, no? Maximum loan is only this much. So that is one way through which you can sort out their interest, or we can sort out the problem by imposing specifically what, sir? Borrowing restriction, or specific name is negative covenants. In simple, it is borrowing restriction. So this is okay. There's one more guy who has provided the finance. Who is that? The equity guys. How will you sort out agency problem from his perspective? Simple. In this example, no. How was manager getting his salary, sir? How was manager getting the salary from ArivuPro? Based on sales. More the sales, more the salary. Change the compensation term. Give the compensation in the form of shares, which we call it as ESOP, employee stock option. Instead of giving him salary in cash, give it in shares. If he is getting shares, will he make the employees slog so much? Because if employees slog so much, I would know that the employee will quit. If they quit, my company ka share price will fall. If company share price will fall, my shares price also will fall. That means I will take the decision more wisely. So instead of giving salary in cash, give it in shares. Like this. Okay. Or link his compensation with the long-term objectives of the company. Could be anything. Okay. So make the company achieve 25% market share and I will give you 20% hike. Something like that you could say. Keep the objective compensation linked with long-term objective. This way, equity shareholders agency problem can be solved. That's all with respect to this particular topic. Any confusion you have? All good, sir? You need a minute or okay? Okay now? All right. Thank you.